there's no really good reason for them not to approve it. I mean, an argument could be made, I suppose, that you want to protect investors against a very volatile asset class and that it's not safe and it goes up and down with such extreme swings. However, as we all know, there are ETFs based on futures that give the same kind of exposure and could potentially give you even more exposure if you wanted to do that through the futures and options markets. So that argument doesn't really hold water. The only argument really would be to say that there's something wrong on the custody side. So the way crypto assets get custodied is insecure and unsafe, and we want to protect the customers from that. Though they haven't really articulated that either. So they haven't really said, here's the problem, fix it, and we'll be able to prove it. They haven't been that generous in their commentary back. But I suppose that would be an argument. So basically the way these things get held and stored, the whole safekeeping side of things is a bit unclear to them, and there's a risk that someone runs off with the money and that the investors are basically held with an empty bag then at the end of the day. That being said, there are, of course, industrial strength custody solutions out there to address that. I fear perhaps the SEC might not quite understand how that operates, and all the custody offerings that are on the market currently, how those actually operate and function, might be a bit beyond them. So their default is to say, I don't really understand that, we don't understand the crypto custody world, and therefore we're just not going to approve it. That would be an explanation. But I think more likely explanation is they just have this profound antagonism towards cryptocurrencies, and they just want to make things as difficult as possible. And that seems to be borne out by not approving these spot Bitcoin ETFs, and also by all these lawsuits that they're bringing against anyone who touches cryptocurrencies.